Welcome to the new Mastery series. In this lesson, we're going to be talking about volatility tax, and specifically how you can go from being a taxpayer to being a tax collector. Whenever I have this discussion about volatility with students, it always comes back to the same thing, which is it seems like I've done everything right in my trade and I've still managed to lose money. To help tell kind of the collective story that I hear from students suffering from volatility tax, I want to introduce you to my friend Jack. And Jack, since he's a figment of my imagination, is married to Jill. That makes sense, Jack and Jill. And so on October 20th, Jack opened up his charting software and he found a perfect trade setup. The Dow, the S&P, the NASDAQ, all three of them were bullish. The market had a lot of optimism behind it. He opened up a chart of love, which of course is Southwest Airlines, and he noticed there's a bullish bounce off from support. And we've got a bullish engulfing pattern in our candlesticks. And the moving averages are all pointing bullish, and they're offering support to the price. And then lastly, the oscillators have all turned bullish as well. In fact, here's the picture that Jack was looking at in his charting software. You can see right here, not only did he have support, he had confluence. And for those of you that have gone through total Fibonacci trading or Fibs and 4, you know that confluence is laser focused support and resistance. So he had a great opportunity to enter a trade. He had, of course, the bullish engulfing pattern. He had the oscillators that have all turned up. Everything looked bullish. So as many of you would, Jack went and opened up his charting or his brokerage and said, you know, I'm going to jump into a love trade here. And he bought himself some $28 calls. These were December calls, and he bought 10 contracts worth. His delta at the time was 0.58, and the cost was $1.06 per share. So his total investment is obviously $1,060 plus commissions. Now, Jack had a target of $39. His stop was at $28. Everything is perfect from a risk-reward perspective. Here's where Jack entered the trade. You can see we jumped in at $31.86, and 2 days later, he's woke up in the morning with excitement because now Love is trading at $34.88. And he says to his precious bride, he says, sweetheart, I think that we just made a bunch of money. In fact, if I do my math right, I think that we're up about 165% ROI. Now, how did Jack get to this number? Let's pause our story here for just a second. Remember, he got into this trade around $31 and change. He's up $3.02 at this point. Remember his delta. If we take $3.02 and we multiply it by a 0.58 delta, that's $1.75. $1.75 is what that works out to. And when we divide that into his expense, which was $1.06, let's see if we can divide on the screen here, you're going to get 165%. That's how that works out. So this is good thinking, right? He says, I'm up about 165% on this thing. This is fantastic. Well, unfortunately, Jill said, sweetheart, I believe you, and I don't want to, doubt that you're telling me the truth, but if we could just open up the brokerage account and I could see it from my own eyes, I would be really, really happy. And so he goes and he opens up his brokerage and he realizes I'm only up 98.1% or 98%. And so right now I would ask you, if you're Jack and if you're Jill, how are you feeling? When I ask students this live, I get things from I'd be upset to I'd be excited. And I think if we're honest with ourselves, and for me personally, I would say, no big deal. I'm up 98%. This is great. This is what trading's all about, isn't it? Already, though, we start to see the volatility tax creeping in, is what I'm trying to say here. We're saying we're only up 98%, but we had thought 165 was where we should be. Something to think about. Let's continue our story here. One day later, we realize that Love starts to begin trading bearish. Jack begins to doubt his plan a little bit here, and he says, maybe I wasn't right. Maybe I was a little too aggressive in my target. Maybe I will lock in my profit, right? That's code for I'm going to completely abandon my trading plan. And what happens is Jack says, I'm going to go ahead and lock in my profit. So we're going to set a stop $1 over where I got into this thing, $32.86. That should be enough to cover my commissions and put a little bit extra in my pocket, shouldn't it? So a few minutes later, Jack gets a notice on his phone. It says, your stop's been triggered, and he thinks, whew, got out of that one just in time, didn't I? No big deal. Covered my commissions, put a little bit of cash in my pocket. This thing is easy, isn't it? This thing called trading. So here's the picture. We got in here at $31.86. We had a high at one point of $34.88. Jack got out at $32.86. He's got calls on this trade. Everything should be great. He should be making money, right? Well, later that evening, he goes home and he says, Jill, honey, sweetheart, I've got great news for you. Remember that love trade? Yeah, well, we got stopped out of it, but we did it for a profit. And she says the same thing. She says, you know, I really would love to see it in the brokerage. And so he goes and pulls up his brokerage P&L, and he realizes to his shock that he's managed to lose almost 35% on this trade. What on earth went wrong? And if you're Jack right now, how in the world are you feeling? You have any words that come to mind? Have you experienced this before? I remember I did before I understood what happened with volatility, or what does happen with volatility. Everything went right. You see, we got in 31.86. We had our high. We got stopped out at 32.86. I should be making money because I bought calls on this thing. What in the world happened? Welcome to volatility tax. We're going to understand by the end of this class exactly what happened to Jack and Jill. In fact, we're going to be covering an introduction to volatility, just an overview. Then I want you to understand volatility and how it affects stocks. We're going to understand volatility and how it affects options. And then lastly, we're going to come back to this idea of volatility tax, and I'm going to help turn you into a tax collector instead of falling victim like Jack did to being a taxpayer. So you ready? Let's jump in and learn about volatility.